What is good, Lottery Stocks fam? The weekend is finally over and it's time to make some money. AMC is currently trading at $7.40, basically sideways on the day, and in today's video I want to talk about where I see AMC going, touch on the charts, touch on GameStop's chart as well, both of the data, both of the numbers for both of those tickers, cover what we talked about in yesterday's video regarding banks but the new NSCC ruling, and then the overall market and the Tesla trade that we talked about. So make sure to watch until the end of the video so you don't have to watch another update video here on YouTube. Without further ado, let's cover everything. All I ask in return, of course, is to hit the like button on this video. If this video gets to 500 likes, I will be picking a ticker anybody picks in the comments down below to cover on the channel and post a video about it. So drop your tickers that you want me to cover and try and get this video to 500 likes. So AMC, this is what we've been tracking with AMC, and it looks like it's heading for a new all-time low. With that being said, I see AMC coming down to $5 over the next couple of weeks before playing out potentially the rest of the cycle, but at least finding a new low, new all-time low on AMC. I don't think we're going to see that squeeze before hitting an all-time low, so just be prepared for that. If you are still loading up, let me know in the comments down below. Now, AMC's chart is very similar to what we see back here. This is just a point of interest that we had drawn out on AMC, but it actually coordinates to the box that we have drawn out on AMC right now, which is the fails to delivers not being reported. Okay, September 29th to I believe October 15th. This is just the date range where they're not being reported to us, and I talk about the investigation into that. However, what I find interesting is if this started everything on AMC and it's lining up where the FTDs aren't being reported to us, is this the last cycle that they are putting us through for AMC? Because this cycle, this first cycle, was when they took the buy button away, right? Played out this and then got that point of interest where they took the buy button away. This is where AMC is trading right now, somewhere like right here, coming down to either retest that low or make that all-time low a little bit later. Looks basically identical. You can tell even without the drawings, this is what it looks like compared to this. Okay, so very, very similar. Vortex numbers, short interest, 9.1% of free float on AMC. We know it's greater. Onco tracker, 800,000 shares available to borrow. Call to put ratio, 3,000 calls compared to 20,000 puts expiring in the money. Not looking good on the options chain. Premium going to market makers. If you're betting calls and you're losing on those calls, you're basically handing money to Citadel. Short exempts actually died down to 122,000, but that is because we are so low, and we are so low on volume as well, that they don't have to put as much pressure on it. Now, 2008, the SEC halted short selling of financial stocks to protect investors and markets, okay? I find this interesting. Take a look at the date. September 19th, 2008, and 10 days after the SEC banned short selling on September 19th, the stock market crashed on September 29th, 2008. So what was really going on? The only reason I'm bringing this up is because in yesterday's video, if you watched it all the way till the end, which a lot of you guys have and you got the value out of that video, we talked about the United States potentially putting another ban on short selling and that petition going around, which I left linked in the comments under the last video that I posted. Hopefully that comes to fruition, but let's move on to GameStop. Now stay tuned because after GameStop, I really need to cover the NSCC rule and Citigroup. Now GameStop, this is the chart before it ripped, and the only reason I'm bringing this up is not only because that's where AMC looks to be trading at right now, but GameStop is playing out kind of opposite, right? It's playing basically mirrored and flipped cycle before we had that squeeze. Okay, before we had that move. This U in the chart that you normally would see on like a cycle reset, which we've talked about plenty of times on the channel, you see it right here, except GameStop starts to chop trade down and kind of ladder down when it chop traded up and laddered up into a squeeze, which makes me think they are, ready to push GameStop into an inverse squeeze, touching our price targets, which we talked about at 1010 or 375, which there is a very old gap to fill there. And it could be the flash down before the squeeze, trailing alongside AMC. That is my outlook. GameStop, 750,000 shares available to borrow. Call to put ratio, we're winning on the options chain ever so slightly. Not really much to say here. Short exempt volume, low as well. Now, Nick Offerman tells Kimmel about Ken Griffin's reaction to the Dumb Money movie, saying he made a stink about it. And most of what I do is reciting what he said in court. In quotes, he's mad that we said what he said in public. I'm going to show you guys this minute clip of the actors in Dumb Money basically exposing Ken Griffin.
It's like, yeah, this would be good for Paul to spend some time in the kitty corner.
And then Seth and Nick, you play a couple of out-of-touch billionaires, which is indeed what you are in real life.
In real life, yeah. It took no research whatsoever.
You didn't meet those guys, did you?
No, not at all.
Those guys can't be happy about this, right?
No, my guy was publicly vocal about saying that the film was full of falsehoods and fabrications. He made a stink about it, and we discovered that he actually hadn't seen the movie. And I think we did a lot of research. We vetted it. Most of what I do is based on actual reciting what he said in court, which they make a document of, you know. Right. And I think he's mad that we said what he said in public.
Yeah, you can't say what someone says.
Isn't that defamation? Like we should, but I think he's backed off now.
Okay, all right.
Because of how
handsome you
we
are.
base the film on facts. Yeah.
Yeah, right. Yeah. When you do that, it really trips people up, doesn't it?
Now, in just the last year alone, Citi has sold $70 billion worth of synthetic shares. That means they collected $70 billion from investors by selling something that they don't own and are keeping that money to themselves. There needs to be a limit for this. We talked about Citi yesterday and all of their securities sold, not yet purchased, but it's not only their securities sold, not yet purchased, that they are doing bad on. We've seen B. Riley Securities take a nosedive in the chart. We saw Deutsche Bank take a major real estate loss that actually just came out today. We're seeing JP Morgan, the largest bank that we focus on, take probably the largest losses. And overall, this could be the black swan that we have been looking for the overall market. And you know that the SEC doesn't play around when banks aren't doing well, because when banks started to slowly not do well, even the small banks, and they got shorted to oblivion during the time frame of not doing well, recently the SEC halted shorting on bank stocks. I don't know if you guys remember that. Anyway, Citigroup estimated $1.872 billion of potential losses that could be experienced due to credit risk for the third quarter of 2023 alone, aka provision for credit losses. This $1.8 billion in provision for credit losses are an increase of 33.62% year over year. When zooming out and taking a step back, we see Citigroup reports a $5.513 billion in bad debt or charge-offs, which is largely attributed to loan modification programs over the first 9 months of 2023. So the too long didn't read is 2023 so far. Citigroup, the parent company of Citibank, has reported $5.5 billion in bad debt that will likely be written off, as well as $5.9 billion in potential losses that could be experienced due to credit risk. Could be, right? So as it relates to bad debt and charge-off specifically, Citigroup has at least $11.457 billion they will likely lose this year so far, at least, and that is a complete loss, okay? Fun fact, Citigroup uses credit derivatives, both partial and full term, and other risk mitigants to economically hedge positions of credit risk in its corporate credit portfolio in addition to outright asset sales. In order to mitigate their credit risks, Citigroup engages in the use of credit derivatives, which we just talked about, their $110 billion in securities sold, not yet purchased. So this bank, bad debt and charge-offs so far this year, lost about $12 billion, and then they sold $110 billion of something that they didn't own. There is not a single drop of regulation here whatsoever. Moving on, we touched on this yesterday a little bit, the NSCC ruling, which is all about mitigating risk. This is regarding the liquidation of risky portfolios during member defaults. Not only are they proposing changes in the haircut schedule, the haircut percentages, the NSCC is proposing to reconfigure the categories relating to Treasury security haircuts by separating Treasury inflation protected securities, aka TIPS, and raising the haircut levels for TIPS, noting volatile market conditions, frequency, and magnitude of security price movements. Also stating the collateral value of eligible clearing fund securities may shift in a relatively short period of time. NSCC is exposed to an increased risk of potential losses associated with liquidating a member's portfolio in the event of a member default when the defaulting member's own margin is insufficient to satisfy losses. Now, isn't a margin call usually so that brokers don't have to pay extra, right? They know the liquidity in these accounts. They give you a margin call because, hey, you're not going to be able to afford this. You're not going to be able to, give us our money back that you bet on margin, this, that, and the third. Nope. NSCC is basically saying, listen, we're the backbone. We're the bailout. There may be some parties that default and can't physically afford, their margin payments, right? They can't satisfy these losses, and that's where the NSCC comes in, and the NSCC basically has to make sure that they can't fail, right? That they can satisfy these losses. Also quoting that In previous years, the DTC has even encountered difficulties. Overall, they cover specific securities, major risk, market volatility, large price movements in a short amount of time, and it appears that they want to speed up the process of implementing haircut changes one business day notices on the internet versus going through the rule procedure. Before we get into the overall market, guys, make sure to join the Discord. The link is right under the video. I'm in there on the daily, so you can come talk with me, talk stocks all day long, and 500 of the most amazing people who are seeking financial freedom like yourself. It's also the cheapest Discord on YouTube. Head in there, you will not regret it. We have options, trading alerts, we post gains, post losses, and talk stocks all day long. Also, guys, a ton of you guys have been doing it and thanking me for the benefits you get, but make sure to thank Moo in the comments down below. Honestly insane, way better than Robinhood or Webull. Use my link in the top of the description or pinned in the top comments. Sign up, open an account, and deposit any amount to start earning benefits up to 16 free stocks, each valued up to $2 grand. $400 cash put into your account if you transfer stocks into Moo. And any uninvested cash that isn't in a stock play and is sitting in your account will earn 5%. So there's no reason not to do so. On top of that, it's a great platform that gives you level 2 order book data for free, access to trading options, going long, going short, viewing other exchanges, and more. I'm going to leave that link also pinned in the top comments. The S&P 500, just when you thought it couldn't go any higher, up 0.4% on the day, 452.63. We called this out. SPY is going up to 455 or 460 before getting that retracement, and that is exactly what I'm looking for. I'm looking for 455 or 460, somewhere in this yellow box, to either enter puts or just wait for the retracement, then get that bounce to re-enter calls. Because once the SPY breaks over 460, a clean break, right, it's going to enter a new trading range. And this is the overall market we're talking about. If this enters a new trading range, you're looking at opportunity for 5-10 years, right? Overall, bullish on the SPY. Expect a retracement towards the end of the week, maybe to finish strong. That is my quick outlook on the S&P 500. And we talked about crypto in a YouTube short yesterday. Take a look at the cycles. You don't even have to pay attention to my TA, but this is the bull cycle from 2011 to 2013. Bear accumulation bull. 2014 to 2017, same thing, and 18 to 21, and here we are now in the accumulation phase for Bitcoin. Quickly touching on the Tesla trade that we have been talking about on the channel. If you haven't seen my Tesla video, go watch that. Tesla is getting the retracement completely flat on the day, not green, not red, 234.33 on the day. Assume a retracement down to 221.50 or 221 for a bottom on this retracement. Contracts I entered are a lot cheaper now, so if you want to join me on this play and a few others, go look at those contracts, right? The contracts I entered were $1,800 contract, and now they are only $1,630 a contract. But yes, I lost about $170 so far on my contract, and I'm willing to lose a bit more before Tesla starts to scale even higher. I'm not worried about this trade. In fact, I am waiting to double up on my call position if it comes down to 221.50. Palantir has been flying up 4% on the day, trading at 21.33, and I just want to let you guys know, be very, very careful with this. Palantir is looking solid, but watch 23.75 or 23.65 for a rejection or resistance on Palantir. And if it breaks over that, Palantir is going to be in a whole new trading range. This thing is going to be beast. Palantir overall looking amazing. Let me know in the comments down below if you are in Palantir. And finally, a last sprinkle on top for the video to close out. Sam Altman joins Microsoft hours after OpenAI denied his return as CEO. So it seems as if something fishy is happening here. Basically, OpenAI fires Sam Altman and then begs for him back, and then Sam Altman goes over to Microsoft, and Microsoft is like, okay, let's start this AI thing with Sam Altman, yada yada yada. Like this post says, the whole situation is incredibly strange, and Microsoft has been flying. Is Microsoft showing what the market is gonna do? Overall, guys, that is what I got for you for today's video. Hopefully you enjoyed watching or found value out of the video. Let me know in the comments down below, because a lot of you guys requested that I talk slower. You know, if you don't care that the videos are gonna be lengthened out, and I will spend more time on these videos, and we can make longer videos than 8 to 10 minutes, right? I can make longer form videos and take my time on the videos if that is something you guys want. Let me know in the comments down below. I love you all. Lottery Stocks out.